China's factory inflation just hit its highest level in nearly 4 years. If you rely on global supply chains or energy markets, this could hit your wallet soon. In May 2026, China's factory inflation soared to its highest level in 45 months. The main driver behind this surge is a sharp spike in energy prices. As energy costs rise, manufacturers face higher expenses for fuel and power, which pushes up the price of goods leaving the factory gates. This energy price shock is disrupting China's industrial output costs more than any time since late 2022, signaling pressure on the broader economy and supply chains worldwide. With factory inflation climbing, Chinese manufacturers are feeling the pinch. As raw materials and energy get more expensive, profit margins shrink unless companies pass costs to buyers. This inflationary pressure could slow production growth as companies reassess output and pricing strategies. This slowdown risks ripple effects across global supply chains, especially in sectors heavily reliant on Chinese manufacturing like electronics, textiles, and machinery. China is a crucial node in global supply chains, so its rising factory inflation can have worldwide consequences. Higher production costs often translate to increased prices for imported goods, affecting retailers and consumers globally. Additionally, if manufacturers reduce output to manage costs, supply shortages and delays could follow. This makes it essential for businesses and consumers to watch China's inflation trends closely in the coming months. Looking forward, the trajectory of China's factory inflation depends largely on energy market developments and government policy responses. If energy prices stabilize or fall, inflationary pressures might ease. However, if costs continue climbing, factory inflation could sustain or even worsen, forcing Beijing to consider interventions. Businesses and investors should stay alert to these economic signals to prepare for further changes in costs and market conditions. For you as a consumer, rising factory inflation in China means one thing: expect prices to go up on many imported goods. Electronics, clothing, and household items made or assembled in China could become more expensive. It's a good time to budget carefully, shop smart, and consider alternatives where possible. Staying informed will help you navigate these changes without surprises. China's factory inflation hitting a 45-month high on energy price shocks is more than just a number. It signals rising costs that could affect everything from your phone's price to the cost of daily goods. Stay tuned, stay informed, and subscribe for updates on how global inflation trends impact your wallet.